welcome everybody to another video on the After Hours channel. For those of you that don't know, my name is Anthony. I'm a long-term investor with a passion for money, stocks, and personal finance. On this channel, I'll be sharing my insights and experiences as I track the performance of my dividend portfolio. I believe in the power of long-term investing and want to show you what it's like to be a long-term investor in today's market. Whether you're just starting out on your investing journey or you're a seasoned pro, I hope to provide valuable information and resources that will help you make informed decisions about your money and investments. Join me as I share investment strategies, discuss current market trends, and provide tips and tricks for managing your personal finances. Subscribe to stay up to date with the latest from the After Hours channel, and let's build our wealth together. Alright guys, so welcome back. Obviously, if you're clicking on this video, then that ultimately means you want to see what my biggest bet in the stock market has been so far. And when I say bet, that is quite literally what I mean. If you're investing in stocks, that is some calculated risk, whether it's a great company like the one I'll be talking about today, or you're investing in penny stocks, which are a lot more volatile. Both investments are a calculated risk. But before we jump into that and we go over the portfolio update real quick, I just want to say that this is going to be episode 11 of Road to 1 Million. If you're unfamiliar with what that is, I'll be tracking this portfolio that you see on your screen right here all the way to $1 million. You'll be able to see my trades, which are typically weekly, my dividends in a six-figure portfolio, and I'll also be giving you guys a heads up on which companies I'll be buying in the future. So, as you guys can see, the portfolio is currently sitting at $123,000. Taking a look at the year-to-date performance of this portfolio, we can see it's up 20.25% or $20,000, almost $21,000. A large portion of that performance is actually because of the stock that we will be talking about today, and I'm not going to hold it from you guys anymore. It's actually Microsoft. If you guys have been following this channel for any amount of time, you will know that I consistently talk about Microsoft as one of my biggest holdings. I've been buying into this company from 2020 and onward, and I've also been making a couple recent videos that I'll tag above that you guys can go watch, saying that I'll continue to buy into this company as long as it trades below $300. Well, fast forward, we can see that Microsoft is no longer under that $300 mark, which I believed was its fair value, and now it's trading around that $330 mark with a huge run recently. Taking a look down here at the bottom, you guys can see that this position alone in my $123,000 portfolio is actually $37,000. Of that $37,000, I actually have a return of 33% or $9,200. Taking a look over here at the right, we can see that I have roughly 111 shares at an average cost of $250. In terms of portfolio diversity, this one holding alone actually makes up 30% of my portfolio. Now, I already know the comments are going to come in that is unsafe, that's bad advice for everybody else, and that's not ultimately what some of the top investors like Warren Buffett preach. But that is another reason for me making this video, to highlight some of the success you can have if you lean into your convictions. Now, before we go any further, let me just say that these are my own personal beliefs. I feel as though I have enough of an understanding of this company and its overall financials to make such a calculated bet like I have. Before its recent run-up, I want to say that I had invested roughly $20,000 or just under that into this one company. And because of its recent performance, it has obviously skyrocketed. If we take a look at the 1 week view of Microsoft, we can see that it's actually up 5%. We look at the 1 month view, we can see that it's up 8%. If we take a look at the 3 month view, we can see that this company has raced up 34%, almost 35%. That is a huge, huge climb over the recent months and years for this company. As I've been preaching in all of my past videos, I think Microsoft was undervalued around that $250 range, and quite frankly, under $300. A lot of people disagreed with me, but I thought the conviction that I had in this company and the financials that I was seeing, to include the innovations that were coming for this company that have recently been coming out in the news, were a clear indication that this stock would easily surpass that $300 mark. If we take a look at the 1-year performance, we can see that Microsoft is up 22%. If we compare that to the S&P 500, we can see that the S&P 500 returned roughly 10% year to date this year. So Microsoft is well in the green and beating the S&P 500. As I mentioned previously, I have been buying into Microsoft from February of 2020. My first buy into this company was actually $517, which back then got me 3 shares at a price cost of $172 per share. So you can say that I saw the value in this company from very, very early on, at least from the perspective of when I started this portfolio and got into investing more seriously. From there, the buys only grew and the investment got even bigger. We can see at the top there, invested $1,500, another $200, $1,000, $1,000, $250, $100, $695, and then another $478 buy. Taking a look at the start of 2022, we can see that I bought an additional $500. January, another $2,000 buy. Few days later, another $1,000 buy. February, $500 buy. Few weeks later, another $500 buy. A few days later, another $1,000 buy, and so on and so on. If we move on and we take a look at the overall financials of this company, you guys will be able to get a better idea of why I had so much conviction into this company, and therefore I took the advice of some of my mentors and some of the people I follow, like Joseph Carlson, which I get a lot of comments about, that you should lean into your convictions. The common response you get when you invest a ton of money and have a large portion of your portfolio in one investment is that it's unwise. A lot of people reference back to that quote from Warren Buffett saying something along the lines of, you should diversify your portfolio to limit the exposure you have and also put a backstop in case that large position fails, because ultimately it is a gamble. You don't know what is going to happen in the future, and companies as big as Microsoft and similar companies can always fail. Now, do I think that's unlikely? Yes. But ultimately, there is a possibility of anything happening. But with that said, let's take a look at a few financials of Microsoft. And then at the end, I'll also give you guys a heads up on whether I think this company is a buy, hold, or sell right now. So taking a look at the valuation section, we can see that Microsoft has a current PE of 36. So I'll be quite honest with you guys, that is pretty high in my opinion. If you take a look down there at the bottom, you can see that the price to book is actually 11.05, which is also pretty high. Moving over to the balance section, because it's something I always want to take a look at. Hey, does my company have more cash on hand than they do debt? As you guys can see, Microsoft has $104 billion of cash and they are in debt $48 billion, which nets out to $56 billion in cash. Long story short, this company is extremely healthy and can pay off any debts that they have if they wanted to. Moving over to the dividend section, because this is a dividend portfolio, we can see that Microsoft's yield is actually 0.82, so pretty low compared to the other companies that I have in my portfolio. If you're a dividend investor like me, I always advise people to take a look at the payout ratio section. So for Microsoft, it's 28%, which is very healthy. Getting into the good stuff, let's take a look at the revenue real quick. As you can see, Microsoft's revenue since 1986 has been incredible. Over the course of 1 year, we can see that their revenue actually increased 18%. And if we look at the 10-year view, we can see it's actually gone up 10.4%. Similar to the revenue, the EBITDA of this company is very healthy. In 2022 alone, their EBITDA was almost $100 billion. If we take a look at free cash flow, which is ultimately one of the most important, if not the most important factors to look at if you're looking at the financials of any company, and we can see that it also resembles the revenue and EBITDA. Extremely healthy. This company is bringing in a ton of money and they're managing it really well. In 2022, they had a free cash flow of $65 billion. That is incredible. If we take a look down here at the bottom, you can see that over the course of 1 year, they increased their free cash flow by 16%, and over the last 10 years, increased it by 8.3%. Now, another factor that I advise everybody to look at if you're going to take a look at their free cash flow is to include their stock-based compensation as well, especially for tech companies. Taking a look at 2022, we can see that their free cash flow, as mentioned before, $65 billion, and they paid their employees $7.5 billion in stock-based compensation. If we switch this filter over to the adjusted free cash flow, we can see that in 2022, Microsoft brought in $57 billion of free cash flow, which is still incredibly healthy. Taking a look at the cash versus debt ratio, we can see that Microsoft has always had more cash on hand. Now, in the recent years, they did use some of those cash reserves for a few different buys, but their cash has always outweighed their debt, as you can see right here. Taking a look at their dividend, we can see that it has consistently gone up year after year. Now, this definitely is not the company that's going to make you rich off dividends, in my opinion, but it is a company that you can rely on to consistently pay that dividend. If you guys are wondering what this is right here, that's just a special dividend payment that some companies do occasionally, just to reward their shareholders if they have a bunch of extra cash on hand. Taking a look at their outstanding shares, we can see that since roughly 2003, they have consistently been buying back their own stock. This is something you want to see if you're an investor. This means that your company, your investment is not diluting you as the shareholder by issuing new shares. Taking a look at return on capital employed, it may seem a little rocky if you don't know what you're looking at, but believe me, this is very healthy. In 2022, Microsoft had a return on capital employed of 30%, which is very high. To sum this up in basic terms, if Microsoft invested $100, that means they got 30% return on that $100 investment. So, therefore, they made $30. Now, it is not uncommon to see some companies have a return on capital employed of less than 8%. So when you're looking at a company like Microsoft and they have some years a return on capital employed of 52%, you know that that company can invest your money wisely. Hence, another reason why I felt so much conviction to give this company my money and make it such a large stake in my portfolio. So moving on from that, let's take a look at some of the recent news lately that I'm sure some of you guys have seen. It says Microsoft's valuation could surge $300 billion with the integration of ChatGPT and their new AI. Jumping back to the valuation section real quick, I just want to take a look at Microsoft's current market cap, and it's at almost $2.5 trillion. So based on market insiders, they think that this company's overall market cap could surge an additional $300 billion, which is incredible. Moving on to another article from Seeking Alpha, which is actually published today, which references Microsoft as one of the 2 dividend stocks to buy and hold for the next decade. Taking a look at a few of the bullet points of this article, it says that Microsoft and Home Depot are the 2 dividend stocks to consider for long-term investment due to their growth potential and history of returning money to the shareholders, which I mentioned previously. While Microsoft's valuation is currently high, which we also took a look at, especially taking a look at that current PE, it says Home Depot's shares are more attractively priced, making it an intriguing option for long-term investors. I have to say, I agree with that. I think Microsoft is currently overvalued right now. But with that being said, I'm not an economist, and I definitely don't understand the full scope of the new integrations of ChatGPT and the new AI tools which they recently came out with. And lastly, we'll take a look at another article real quick from the Motley Fool, and that is Unleashing the Power of AI, how these companies are leading the charge. Taking a look at the key points section of this article, we can see that Microsoft is the first key point, and it says Microsoft's investment in OpenAI will enhance its broad portfolio of products and services. And they have already demonstrated that recently. Diving into this article a bit more, we can see it says, following the earth-shaking debut of ChatGPT, Microsoft followed up its seed investment in OpenAI with another $10 billion in January, bringing its total investment to $13 billion, or just under 50% of OpenAI's $29 billion valuation. So if you're not familiar with what OpenAI is, that is the company that actually created ChatGPT, and now, as you can see, Microsoft owns 50% of that company. Moving on, it says Microsoft is now infusing all of its business infrastructure, platform, and software products with OpenAI's technology. Not only that, but Microsoft is also using its newfound AI capabilities to enhance other products where it does not have an incumbent lead, such as Bing Search. The debut that they're referring to is also something that they covered. They went over the new Bing Search tool and how they're going to integrate OpenAI's technology into it. So to wrap this episode up of Road to 1 Million, let's bring it back to the portfolio. Year to date, my portfolio was up 20% or $20,000. A large portion of that return is actually due to Microsoft. Now, if I listened to the people that told me it was risky to invest a large portion of money into one holding, I would not have the returns I do today. Now, with that being said, I don't know the future. Anything could happen, and that is why I encourage everybody to do a little bit more research into any company you're going to invest your money into. Believe me, I get it. Sometimes it's not fun, it's exhausting, or you don't know what you're looking at. And that's why you have platforms like this and channels to follow like mine, so that I can break down some of the financials you may not understand, or at least point you in the right direction. If you have any questions about the topics we covered today, feel free to leave your questions in the comment section below. If you have any questions about my holdings or you want to see a deep dive into one of yours, let me know as well. To stay up to date with the companies that I'm buying over the course of 2023, don't forget to subscribe, and I will see you in the next one. Take care.